50% of marriages end in divorce. More than 70% of those marriages, a home is involved. But what do we do next? Whether it's selling the home, applying for a new home loan, or refinancing one person off the mortgage. And if you're a mortgage loan originator, you should know the best practices for how to delicately walk one of your clients through the home buying process and the refinance process while going through divorce. Well, I have something for you that you're not going to want to miss. Today's episode is with a super special guest. She's one of the most influential people in the mortgage industry, and she has a niche carved out where she is crushing it, helping recently divorced homeowners apply for new financing. You're not going to want to miss this episode. Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and an amazingly special guest. I have followed this lady for 5 years. This is the first time we get to meet in real life. She hails from Charlotte, North Carolina. Today, she's at Universal Studios Orlando because she just spoke at MortgageCon 2025. When she's not working, you will find her with either her many kids or her many dogs, or possibly out on the lake with her husband. She is my new friend, the mortgage mentor, aka Rebecca Richardson. Rebecca, welcome to the Loan Officer Podcast.
Thank you for having me.
I'm so stoked about this.
I'm excited.
I don't know if you know this yet, but there was like a time period, probably like 2022, 2023, where I couldn't open up IG without one of the fans of this show asking me to get you on as a guest, right? So somewhere along the lines, like our paths were crossing. The people who were following you on TikTok were tuning into us on either Spotify, Apple, or YouTube. And they're like, you got to get the mortgage mentor. Do you know her? I'm like, look, I know a lot of people in this industry, but I don't know her. So I was stoked when I was asked to come be a part of MortgageCon, and I was looking at the speaker guide. And I was like, wait a minute. The mortgage mentor is going to be there? The Rebecca Richardson? I was like, we got to get her on the show. So here we are. I'm excited. And I felt like we were old friends. I mean, that's the power of social, right? Is you connect. And so when you show up, you immediately hug and you're like, it's my friend. And it's the first time you're meeting. Yes. Yeah, it's fun. It's like I know you, but we've never met in real life.
Right.
And I think we're going to talk about that with the audience because you've done a phenomenal job of, 1/3 of your business right now is coming from people who feel like they know you, but you've never met in real life. Like you are one of the OGs for creating an online brand to attract home buyers and mortgage leads to you so that you didn't have to chase.
Exactly.
And that's a really cool story in itself. But you've also really, I feel like from following you, you've gone all in on letting the people that you serve, your community, your circle of influence know that, look, I'm someone who can empathize, sympathize, and help you navigate divorce, especially when it comes to the real estate owned and then what to do next when you've had a married couple who owned a piece of real estate and now one of them is getting the home, one of them is not, but both people are on the mortgage, etc.
Right.
And I think that's something I know we've never done. We're 500 plus episodes here at TLOP and we've never done it. And at almost 50%. Almost 50% of all marriages end in divorce. And of those, we know that 70% own homes. And it's like, why are we not talking about this?
Yeah, we don't talk about it.
We don't train it. We don't coach it.
Right.
I mean, as much coaching as I've done throughout my career, I've been coached. Not once has someone said to me, hey, by the way, here's how you help someone delicately and professionally navigate divorce when homeownership is involved. And unless you've gone through divorce, which is pretty shitty and sucky and probably wouldn't recommend most people I know have gone through it, it's hard to really empathize. Yeah. So I think today, if it's okay with you, I do want you to share with us, the audience, right? Home buyers, real estate agents, mortgage brokers, loan originators. I want you to share your experience that you're having with making divorce a big part of your practice. And then also, like, can we just lace in everything that you've learned over the past 5 or 7 years of creating content and then using that content to really kind of explode onto the scene, both nationally as well as in your local market?
Absolutely.
All right, cool. But let's start with this. When did you enter the industry and what attracted you to mortgage?
So I became a loan officer in 2001.
Okay.
And the 2 years previous, when I was in college, I went to UNC, go Heels. But when I was in college,
That's a smart kid school.
I mean, yes.
That's my daughter's like stretch school, by the way.
I'm fourth generation, Carolina born, Carolina bred. So
Wow. So you got the Carolina blue and yeah. Okay. Very cool. You know, in Orlando, UCF, we have the same color blue, but we call it Canaveral blue.
Sure.
Yeah. But okay.
Whatever.
Yep. All right. So you're Tar Heel.
So I'm a Tar Heel, and the last 2 years that I was at Carolina, I was supporting myself. So I put myself through college. I was on my own, and I was working for a financial planner, and I loved it. I loved all of the the seventh wonder of the world, compound interest and like understanding these things and all of that kind of stuff. And had gotten married with somebody that I had met there, and we moved to Clarksville, Tennessee, to be at Fort Campbell, Kentucky. And can't really do a financial planner's job very well when it's you're trying to build a book of business and have that stability if you're going to move every 3 years.
Okay.
So we were able to buy our first house with a VA loan, which was amazing. My dad was a real estate attorney, so I had a little bit of exposure, but there was no way that I wanted to be trapped in the deed vault like I had been with him, in the summer and things like that. And so I had asked my realtor, I said, will you help us get a house? Can you help me get a job here? And he said, yeah, sure. I'll hook you up with this, this broker. You can go over there and see if you can be a processor. So I put on my very best college suit, still had my GPA on my resume. I show up, and the owner of the company, I'm like, hi, this is me. This is what I can do. And I've worked for a financial planner, and I think I'd like to do this. And I don't know what a processor is, but if you'll tell me what it is, I'll work hard and make you money. And he goes, so you want a job that is not available and you don't know what you're doing? And I'm like, yes. And he goes, have you thought about being an originator? What is that? Yeah. And so that's how I was exposed to it. And that's how I got started. And so, it was definitely there weren't all these training opportunities at the time.
So 01, probably doing a lot of refis?
No, because and that's the thing is like my career has been so I think against the stream, and we were talking previous to this is like a lot of rule breaking, but we were in a VA town. So it was very heavy VA. It's what I learned first, and people didn't typically stay there long enough to refi. So there weren't a lot of training opportunities and things like that. It was basically, here's some rate sheets and cards, don't hurt yourself. And they just told me, go to the real estate companies, go find, go talk to realtors, get a deal, bring it back, and we'll help you figure it out. And I'm like, that doesn't work for me in my brain.
Yeah, you're a bit of an introvert, right?
I am.
I would never have guessed that.
Yes.
Like even today when you and I got to meet for the first time, like I saw you and like my eyes lit up and you're like, oh, yeah, I would have never taken you as an introvert, but off camera, you were saying that like you got into social because you're a bit of an introvert.
A little bit, because it's like, like you said, a lot of dogs, a lot of kids, not a lot of time. So for the people who are doing the, the networking circuit and all that kind of stuff, one, it's just sort of personally draining, and two, it just doesn't fit with my life.
Yeah.
So anyway, that's what I did is I printed out the blank FHA conventional and VA, all the disclosure sets, and that's how I learned mortgage. And then basically a processor taught me how to originate.
But did you actually go door knocking with your rate sheet like they asked you to do, or did you find a different?
Yeah.
Oh, you did. Like you're like not my jam, but I'll do it anyhow.
Yeah, because at the time I was like, I don't know what I'm doing. So these other people are successful doing this thing, so I'll do this thing. And because I'm a hard worker and all those things, definitely had success and did the calling out of the phone book and all of those things.
Rural Kentucky in 2001, your average loan size, my guess, is $90,000.
It was, yeah.
$90,000. And were you even making over 100 basis points back then?
I think I was right at 100.
Right at 100?
Yeah.
Like when I entered the industry in 04, 55 basis points is what I earned.
Yeah.
In 06, I made 55 basis points. I did like 110 units for $26 million.
Yeah.
At 55 basis points. Like these boys and girls have no idea what they have today. One, their average loan size is much bigger than what ours was. And then at the same time, I was all self-sourced too. I wasn't like, it wasn't like someone was handing me leads. If someone hands you leads, you're making 55 basis points, like, oh, okay, whatever.
Oh yeah. I mean, you eat what you kill.
Self-sourced. Wow. So since 01, so you're 24 years now.
Yes.
As an originator. And social wasn't obviously around in 01 or even in 11. What prompted you? I know I kind of teased it, or maybe even I kind of spilled the beans a little bit with you being a little bit of a self-professed introvert. But what was your catalyst to want to go into video content and having a social presence?
I dabbled with it, started in 2017.
Okay.
I used some of it in automated emails out to clients. Hey, thank you for the opportunity to work for you. This is what, when you complete your application, this is what's going to happen. This is what you can expect from me, laying all of that out, because my emails were getting quite long explaining the process. And then I would use some of them on Facebook, some of them on Instagram, old school IGTV and things like that. But I mean, listen, it's scary. It's scary to turn on the camera. It's, you're putting yourself out there, and I wasn't all in. I really went all in 2019 when Gary Vee said, anybody with a business needs to be on TikTok. It's a great video, vertical video editor. And I thought, great, I'm always here for efficiency. I had my daughter show me how to use it, and the rest is history.
Wow. So go back to like 2017. Actually, go back to 2001. Mm-hmm. At what point in your career did you feel like you made it?
Ooh, that's a good question.
And you can't give me the answer that all of us want to give. Well, I still feel like I haven't made it because there's always so much to learn. But like at some point, you're like, damn.
I think the first year that I made President Circle for a company that I worked for.
Like, was that like 04? Did it take you 3 years to get there? Did it take you 12 months to get there? I mean, you were young. You were 20, 21 years old getting started, which I think is a detriment sometimes. I think it's a double-edged sword. The benefit is you're not used to making money. So therefore, you don't have to make a lot of money,
right? Which
means you can endure the suckiness of those first 2 years.
Yeah.
Then the downfall is, some of us, we could be 30 looking 18. Some of us are 21 looking 12.
Right.
And there's a certain amount of life experience you just don't have. And the better referral sources might not trust you.
Right.
So like at what point when you got started in 01, how long did it take you before you were like, oh, I made President Circle?
I think it was 2008. So I moved back to Charlotte late 2006. Started with a company in Charlotte because I was in moving from Georgia. So we'd moved from Tennessee, Georgia, then back to Charlotte.
Army?
Mm-hmm.
Okay.
And then when I was there, went to the kickoff for the year, the company meeting, and the president of the company was like, okay, well, last year was a great year, 2006, but this year coming up, is 2007. And I'm like, I'm not hearing that. Like, I don't want to hear that, because I'd already built my business before, and I had built it up to something sustainable. But of course, then I had to completely rebuild it when I moved. And I think it's one thing to build something when you haven't done it before. It's a totally different thing when you've already done it and you have to rebuild it, because you don't have like the thrill of the chase of like, can I do it? You're just in there like grinding to build it up.
Again, double-edged sword. For those that haven't done it, and if you ever were contemplating doing it, it's a double-edged sword. The good news is you've already done it once. You can stand it up way quicker.
Sure.
The bad news is
you're not learning lessons or not learning the same lessons.
The bad news is there's no part of it that's exciting.
Right.
Usually.
Right. There's no dopamine hit.
It's so mundane. I never had to rebuild in a different market, but I tell a signature story where I was a part of this amazing relationship with a real estate agent, then her team, then her brokerage, and eventually it's got to a point to where it ran its course, right? And quite honestly, the relationship became what I felt to be abusive on my end, and not like in a negative way, but it was like, look, you want my time, my discounts, my money, and it's like, well, at some point that just doesn't make business sense for me.
This isn't a partnership.
Yeah. Maybe for someone else. And don't get me wrong, 3 other lenders now work that account, and those 3 lenders all do a ton of volume, but it just didn't work for me.
Right.
And I made that conscious decision that 1/3 of my business was going to walk out the door based on me not being willing to sign an agreement, and I was going to have to go rebuild.
Right.
And I knew it's going to take me 9 months. It's going to freaking suck, but I know I can do it. And I'll promise everyone who tunes in, we're better because of it. Like,
oh, absolutely. I mean, it's you learn the strength from being, from that tenacity, from the persistence. I mean, so, it's kind of like, well, this is what I'm doing. And so I was having to rebuild my business from scratch. So basically what I would do is I'd go get those home magazines and, that are like at the grocery store. And it was kind of like a game for myself, as I had to call at least 10 agents. I had to set at least 2 appointments. And if I didn't set 2 appointments or call at least 10 agents, then I had to keep going until I met both of those metrics. And that's the thing is my dad used to say, he'd say, my family calls me Becky. Y'all can't call me Becky.
Yeah.
But my family called me Becky, and he would say, Becky was precocious, and then she became recalcitrant. Recalcitrant, you're just kind of contrary and just sort of like, I want to do it my way. I need to try it my way. And that's what I did. And I did that until I started to build up that referral business in 07 and 08. And obviously, Market Armageddon and all those kind of things. So I learned how to do more than just VA, because when I was in Tennessee, I had done exactly one 80-20 in the 3.5 years that I was with that company. Not a whole lot of conventional, some FHA, but very, very heavy VA. And I just had to learn to do all of it. DPA, the city housing options, all the things that I could do to just, to keep the volume coming in.
You just spoke to my heart when you talked about getting the basically Homesland magazine and making 10 outbound calls to schedule 2 appointments. I put every one of my coaching students through something that I call the 12-week challenge. And it's literally for 12 consecutive weeks. They have to reach out to 12 agents, usually via any more text or DM. Back in the day, it was a freaking snail mail, right?
Right.
And then the next day, they have to then call all 12 to schedule 1 appointment. So you're going for 2. I just tell them 1 appointment because I know that if they do that for 12 weeks, it's 60 appointments. Mm-hmm. I know that of those 60, half of them weren't worth their time. I know of the half that were worth their time, only half of them or 15 of them will actually work with them. But I know if they do it, they literally just added 15 referral sources that will refer them quarterly, allow them to close 1 or 2 transactions a year, but of which you start running the math, you're like, dude, you just made 60, 70 grand because you're willing to grind something out for basically 60 work days.
Right. And that's the thing that I think a lot of times, whether it's social or it's building up, rebuilding your business or whatever, is you have to give yourself a long enough runway. Right? Because if we're doing something new, you get that dopamine hit. You get that, like, I did the scary thing. And then you get the middle phase where nothing's happening and you're not getting any kind of external feedback. So what's worked for me and what I always advise when I'm coaching is set that timeline out a little bit further out to give yourself, it's like, I'm not going to quit until I get to this point, because you need to give it enough time. And it's also not just getting to the metric of getting those appointments or adding this many referral partners. Yes, track that. Yes, understand that. But it's also all the stuff that you're learning along the way. You're getting feedback from who you like to work with, what they're looking for, what's important to the realtors, and all of that makes you better. It's not just kind of checking off the box.
Awesome. I love that. So now we get to fast forward to 2017, and you're basically saying, look, I'm doing amazing communication to my borrowers. Mm-hmm. I'm setting the proper tone. I'm laying out the proper expectations, and my emails are getting super wordy. Video's kind of where it's at. Let me create these videos. I'll host them on YouTube, send them a link, and then that way they don't have to read everything that I wrote. They can actually listen to it, and I don't have to write it every single time because I can just have it kind of be evergreen.
Right. And also because of online applications and stuff, because again, it's like back when I started.
Yeah.
But, we weren't having as many face-to-face interactions either. So how can you build a relationship and build a trust with clients just over phone or just over email? So it gave me that chance of along the way, just reiterating and strengthening that relationship because they were seeing video, because they make that connection. They have a stronger connection than you can just do, through email and text.
And then when did you get on TikTok?
Late 2019.
2019. And when you went on, were you Rebecca Richardson, or did you go in as the mortgage mentor?
No, I didn't develop the mortgage mentor until I think it was maybe mid 2020. So I think I was probably on there as just RWR CLT for my name and and my airport code.
And then fast forward 5 years. So you just gave a presentation. Mm-hmm. Give us the highlights. Like give me like the 90-second elevator version, the Cliff Notes version. Sure. Of what, because the people who are tuning in more than likely didn't make it to MortgageCon this year. And it's okay, you can come next year. It's a really cool event.
It is so cool. I have been gushing over the staff and to everybody. I'm like, y'all killed it.
It is. They do an amazing job. And this is only the second year that they're doing it.
I know.
Right. And shout out to United Wholesale Mortgage, because UWM it's a big sponsor and they help underwrite it. And I hope they continue to sponsor it, because it's only a matter of time before this truly becomes not just the coolest originator conference in the country, but also the best, in terms of the biggest. Right. The speaker lineup's legit. I dare you to go to MortgageCon 2025 and look at the speaker lineup, because that's what you missed. So one of the people you missed was Rebecca speaking. So because I know you spoke a lot about content, right? And being active on social, and without giving it all away, and without necessarily, because I want to have you on TLOP coaching, and maybe you can do something for us. Yeah. And maybe you'll get into what people miss, but just give us a quick high level, because I do want to jump into what we teased the show with, which is, becoming a divorce lending specialist. Right. So first, high level, what did the people miss today?
So what I talked about when this talk is social made simple, because
social made simple.
Social made simple, because a lot of it is, you always talk about the stuff you see on social, somebody's highlight reel, but that's the thing that a lot of people don't execute on making content because they think, oh, I can't do it like her. I can't do it like him or whatever. And they think they have to have all the equipment and all the editing and the fancy editing and stuff like that. And it's like, you're missing the point. It does not have to be perfect. I think you had said that, you have to have quality, not perfection, because it's about the connection. So we talked about identifying an avatar. That's very important, so you know who your ideal client is and you're speaking to them, because just making general content and just kind of chasing high views, it might look great and it might be good to brag to your peers, but it doesn't always convert.
It don't pay the bills, y'all.
It does not. So you have to figure out who you're talking to and then figure out what you're going to say. And there's a good easy formula. I call it perfect formula or perfect script formula. And it just walks you through to break it down, because we talk to clients and realtors all the time. But how do you condense that down where it's impactful? You're giving value. You're drawing them in 30 seconds. That's a big ask. So just kind of what that formula looks like, and then also how do you take that and then edit it, put it together? How do you, and even before you get to the editing, how do you film to make it easy on yourself if you're going to edit it yourself, or what you're looking for, or the direction that you're giving if you find an editor?
Do you edit yourself?
I used to edit all of them, but
and what did you use?
Primarily TikTok or some CapCut. I'm not a CapCut
CapCut, Opus Pro.
Honestly,
right?
I'm telling you, people are sleeping on Canva.
Okay.
Canva has some really good video editing, and because people tend to dabble in Canva a little bit more, so kind of where the buttons are and all those things are a little bit more familiar. So if you haven't tried it out, definitely try Canva. And then after editing my own 1,000+ videos, I'm a little over it. Yeah. So unless it's something that I just want to experiment with, then sometimes I will still edit them. But I work with an editor for most of mine.
Do you batch your content now?
Absolutely.
Have you always batched your content?
I've been doing that for about the last, I would say, 3 years, 2.5 years.
And for those that don't know, batching content is basically sitting down like on a Monday for 3 hours and saying, I'm going to create this much content. Like whether it's, I'm going to make these 10 reels and these 5 carousels, and it's all pre-created. And then you can either schedule it or just every day yourself drop it.
Yep. And the thing is, because when you think about to make a video, specifically, you've got, you have the idea. So you're collecting your ideas. Then you have a script or your outline. Then you have to film it. Then you have to edit it, and then you have to post it. And there's some people, like my business partner, he will do that start to finish, and it works great for him. That I can't sustain with that. It burns me out. So part of the secret is the consistency, and what works for me is batching. So I will, collect all of my ideas as I go, and then I will have a batch, outline scripting, and then I will typically film, and then I will send them off for editing, or then I'm editing, and then that way either I have them to schedule and post. And a lot of times it's not even in the same 3 hour. I mean, it might be, an hour and a half here or an hour here or things like that, because you're constantly switching. You're going from analytical left brain to creative right brain and back and forth. And that's why it gets so exhausting, because you're switching, all throughout if you're just trying to do it in one shot.
Yeah. And then you're 6 years into it. And I think I teased in your intro this, but I want to ask you the question directly. What percentage of your fundings are coming from your social media presence?
It's consistently a third.
Okay. Now, do those leads convert at a higher percentage, lower percentage, or same percentage as the leads that maybe a realtor or a financial advisor may refer you?
It's slightly higher than realtor, just because a lot of times when they're contacting me, they already trust me. So it's more circle of influence, I would say, level of referral.
So I love that. So you're creating content not necessarily for strangers to reach out to you, but the people who already know you to reach out to you?
No. It's just that they feel like they know me. Because that's one that, they'll call me, they're like, I've been watching you for 6 months. I've been watching you for a year, and you're just like you are in your videos. I'm like, aweson, because I don't have time to be anybody else. Yes. And I don't want to. But it's great because it breaks through that. I'm not on tryouts, right? They're not trying to figure out if they like me enough or they trust me.
Okay.
They already do.
Yeah.
They are just at the point where they want to move forward. And that's where the purpose of social media is so important. Why you have to give yourself that 6 months is because it's not a point of sale type marketing. You're not trying to catch somebody when they just talked to a realtor and now they want to get pre-approved and they found the house that they want and it's got to go right now. You're trying to catch them at point of thought. And that's why it's very important to speak to somebody specific, because if you're catching them at point of thought, they might not even told their spouse that they maybe we should buy a house or, things like that. But you're giving them that information when nobody else is speaking to them. They're not talking to a realtor yet. They're not maybe even talking to their parents, their friends, their financial planner or whatever. They're just consuming content on social, and you're filling that void with valuable information. Of course, they're going to trust you.
Yeah. And I like what you said, give it at least 6 months. It's a game of chess, not a game of checkers. You're not going to just post a video and be like, oh my gosh, I got all these leads.
Right.
It's like, no, you're branding yourself. It's going to take months. I would tell you, if you're going to do it, you stick to it for a freaking year.
Yes, but if I tell a year, then they freak out.
Okay, so that's what you tell them, 6 months. Okay, it makes perfect sense.
Well, I'm saying 6 months at least, because you will get past that kind of lag period where you're not getting any feedback, and then you're going to start to get comments. You're going to get DMs and things like that. You're going to start to actually get applications from it and start to hopefully have some closings. And it's like, oh yeah, this is working, and I can then invest time because I know that it's working.
Yeah. So let's go ahead and pivot. Let's pivot into divorce. Because I mean, again, I'm a fan. I follow you, right? So following you, it's like, wait a minute, you've made this pivot. I've noticed it in the content that you create. Maybe that's an avatar that's working. That's something you're passionate about. What can the rest of us learn from you as it pertains to working with men and women who are going through divorce, working with attorneys that specialize in divorce, and how we can play a part as an advisor from the mortgage or real estate side of things?
And I think you touched on it. It was one of the things, just to have that empathy of where they are in the process, right? Because it is a little bit different. They either are going through, or they have just gone through, for what is for most people, an emotionally, financially devastating process. Yeah. So if you think about everyday clients, you're talking about their house and their money. Of course, they're going to be emotional about it. They're going to be stressed. And then you add in the whole part about a divorce. It's like to the nth degree. So it's not, you can't just kind of necessarily rush along or just like, yes, do the application, et cetera, because there's some nuance there. You need to understand where they are, understand what it is that they're trying to do. And are they even at the point that they can move forward? Or are they at the point where they need your advice to say, hey, your next best step is to do X or Y to put yourself in a good position. And once you're there, then we can proceed. Besides going through a divorce, which I don't recommend for anybody. Again, I haven't, fortunately had to do this, but I have many friends who have. Besides going through one yourself, like, how could someone best understand the process, right? I'm a lender. I want to be a great lender. Right. I'm an advisor. I want to be a really good advisor. If I have a client reaching out to me who's getting ready to either go through divorce or recently went through divorce, are there any courses, or is there any, like, what's the recommended way based on your experience and your success for someone like me to better understand how to help navigate this? So I know that there are some courses. I think that there's a good certification that you can get. I haven't gone through that myself because I did it the hard way. Because you did it the hard way. Yes. The hard way. Yes. Because coming back to the avatars, a good avatar is to be, help the person that you used to be, right? Because obviously you can relate from that perspective. But the biggest part, a lot of times where people get tripped up, is either understanding how, alimony or child support or spousal support, what is going to be needed in terms of month one, do they need to receive it in order to qualify? Yep. And setting the expectation of how long they need to receive it. Because a lot of times these agreements, can have fabulous family law attorneys. They don't know mortgage guidelines. Who wants to know mortgage guidelines? But, they write it and an agreement is signed, and it's like, okay, great. Now it's signed, it's done. We've got child support or spousal support or whatever the case may be coming in. And I'm ready to move forward. I'm ready to buy the house, or I want to refinance and keep the house. And we have to burst the bubble by saying, I'm sorry, you have to wait 5 more months or 2 more months or whatever it is for the loan type. Yeah, depending on the guideline, you're going to have to show that they're A, receiving it, B, they're receiving it on time. Correct. Right? And that can, that's a double hit. And so they take it so hard because they think that they're at the finish line. You're like, like Charlie Brown with the football. Sorry, not now. So a lot of the messaging around that is talking to realtors, talking to divorce attorneys, letting them know, hey, if this is the situation, why don't we talk before they have signed the agreement? And I've had clients and even friends who we've pre-underwritten their file with the agreement that they plan to sign, just making sure that everything that they want to do after it's signed can be done. So that's one of the big sticky points. And then also understanding that if you're, doing a refinance and you have to do an equity buyout, for a spouse, that you can do that where you can go up to 95% instead of being capped at 80.
Yes. Say that again. Like, I know that guideline because back in the day I was a guideline guru.
Yes.
Now I tell all my coaching students, we don't talk programs, products, or guidelines unless it's how to sell them to generate more leads, right?
Correct.
But I do know it, right? I originated thousands of loans, and that is a Fannie guideline that not many people know. It's like, hey, you don't get hit with the same LLPAs, right? So it's not a cash out refi LLPA. It's just a regular rate term LLPA. And you can go to 95% LTV as long as there's a divorce decree or a separation agreement that states one party has to,
pay out X.
Yeah. So like just knowing those guidelines and speaking that language, I know on my end, I'm a Floridian, right? So in the state of Florida, I knew enough about divorce to say this. When someone called me to say, hey, I'm getting a divorce and I'm looking to do X, I knew enough to say, hey, I'm not an attorney, but most attorneys are probably going to advise you to do none of that until you're legally divorced. Now, that may operate in different states, and that's not to say that there isn't a way for, Bob and Sally to separate, still be legally married, and Bob buy another home. But I do know there enough about the law that there's some legal ramifications that you're going to want to make sure you are protected about, at which point my job as a lender is to not to be an attorney, but say, hey, you should talk to an attorney.
Right.
Is that very similar conversations to what you're having when you're, because you created an avatar, these women are reaching out to you,
right?
Because you can empathize, right? You're like, bro, I've been there.
Yeah.
Like, sis, I got you. Like, I got you. But hey, what you're trying to do, although it makes sense logically, it's not going to make sense with the state of South Carolina or North Carolina.
Correct.
It's not going to make sense with mortgage underwriting guidelines. Can I talk to your attorney? Or, hey, your attorney's going to tell you what I just told you. The good news is I can help you, but it's going to be in 6 months.
And that's the thing is being able to have those conversations. It also just kind of like if you attract a buyer maybe that has a realtor that you haven't worked with before, you now have the opportunity to create a new relationship. So a lot of times the way that conversation goes when I'm talking with someone is, hey, why don't you and my attorney or your attorney, we can hop on a call. We can, I'll loop them in as well. And then now that's also a new referral source for me because it can be brought in on part of that planning process to, again, make sure that what they want to do can actually be done on the timeline and the way that they want it to be.
So that's a phenomenal tip, is that when you're helping someone with going through a divorce situation with a new home loan, go ahead and get a Teams or a Zoom call or a 3-way call with the borrower and their legal representative so that you can understand the divorce decree, because you might not understand it. I don't
and
speak
that's the thing,
lawyer.
I'm not going to practice law and things like that, but it's, if you know your state law, it's like, okay, if you do want to try to buy, because in the Carolinas, for example, you typically have to be separated for a year before you can file.
Okay.
And being in that limbo is hard because people are like, okay, mentally I want to move on, but legally I can't.
Yeah.
And so sometimes they do want to move forward with a home or with a refinance, and being involved in that process is like, look, I can't advise you on the law part, but in terms of, do you need a free trader agreement or things like that, that's the attorney's lane. But then the attorney can say, okay, but we, do they need to receive, how much do they need to receive in child support or spousal support in order to qualify? Do they even need it? And be able to bring that team together to take care of that person versus sometimes having, correct but opposing, basically, kind of agendas in sense of, we have to adhere to these guidelines, they have to adhere to these laws, or kind of what their process is, and then that way it doesn't conflict.
Yeah, or on the other side, it's what if they're paying spousal support? What if they're paying,
Absolutely.
and then having to factor that into the DTI,
Absolutely,
to make sure that when you say yes, your yes really means a yes. So what I'm hearing is put on the white gloves. This is a very emotional time for men and women, both
Absolutely,
going through this, seller, refinancer, purchaser. Take a deep breath and then understand you're not the attorney, but they have an attorney. Y'all can work in unison and be delicate, but also be judicious with understanding the underwriting guidelines as it pertains to both those that have to pay alimony, child support, separate maintenance, those that receive alimony, child support, separate maintenance, and what is required to use and document said income.
Correct. And the thing is, it's like you said, it's have the empathy, have the understanding that they're going through a tough time, while also not mincing words and being able to be direct and say, here is the game plan. These are, these are the milestones, or this is the documentation that we're going to have to hit for this to work, and being able to explain that clearly and succinctly.
Awesome. Rebecca, I love this. Unfortunately, our time is running short. I could do this all day, and I'm going to try to convince you to somehow start ingraining yourself with the TLOP culture, right? Like
Twist my arm.
we have thousands of men and women throughout the country who literally got into the industry because of the podcast.
That's
we
awesome.
have tens of thousands that come up to us and send us DMs like, "You're the reason why I did 144 units last year for 32 million."
It's
like,
the coolest.
Bro, I love this.
Yeah.
And then, we have some that have come and said, "We want more."
Yeah.
So we gave them more. Last year, I launched a coaching company that I'm on a mission. It's going to be a top 3 coaching company for mortgage originators in the country. And I can't do it alone, right? I need men, I need women, I need brokers, I need bankers. And I have 5 awesome faculty now. I don't have a faculty that speaks mortgage mentor, right? Like I don't have someone that can say, "Hey, my secret power is social media. My secret power is creating these avatars." So I hope that you and I can take today as a launch pad to maybe have some further conversations.
Don't threaten me with a good time.
All right. Consider the threat out there. But before I let you go, if people wanted to follow you and they don't already follow you, which if you don't, like, what rock are you living under? But where's the best spot to find you, reach out to you? If they had a question, how approachable are you? And then if so, share your contact information with the audience, please.
Absolutely. So you can find me on all the socials at The Mortgage Mentor, and it's the.mortgage.mentor. And you're welcome to DM me. Please say hey in the comments, in videos or whatever, because people are always like, "I watch your stuff." I'm like, "I never see you. You got to say hi." But you are welcome to reach out to me for DMs. Just if you have any questions, that's what I'm there for.
Awesome. So she's Rebecca. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. If you're new to the show, welcome. Do us a favor. Go to our YouTube channel and subscribe. The YouTube channel gives you more than just the podcast. We have training videos and we have sales scripts on that YouTube channel. Go to our website, tloponline.com. That's TLOPonline.com. Sign up for the newsletter. The newsletter is free. I write it, so it's pretty decent. It doesn't suck. But more importantly, once you're a newsletter subscriber, you will be invited every single month to join me for one of my signature masterclasses that I'm teaching. In the month of February, I'm literally teaching Unlocking the Code to Social Selling. It's an hour-long with Q&A. It's a phenomenal class, and it would be free to you as long as you were signed up to receive our newsletter and you are subscribed to our YouTube channel. Now, obviously, if you want more coaching, we have coaching that starts as little as $250 a month, which I will tell you is the number one value in the market, period, bar none. We give you for $3,000 a year what other people charge you $3,000 a month. And then on top of that, we offer workshops, we offer boot camps, and we have opened up elite coaching for select members only that you can acquire more about. But she's Rebecca, I'm Dustin Owen. That's all the time we have for today. We do look forward to catching you, though, on the next episode. Peace.